I'm gonna make this video as short as possible to explain this monthly candle. You can see price is reacting off. Let me take this off. Price is currently reacting off this fair value gap on the monthly time frame, and then as you all know, there's what we call manipulation on each candle when price forms each candle. Like this is on the monthly candle. If price is supposed to go up, we'll be expecting a manipulation like this, because today is just I think 7th of this month. A manipulation downward, then we get the expansion. This is basically what I see right now. Since price has traded into this inefficiency, coupled with price coming down to this breaker block right here, you can see price is within this range, and then this is an institutional reference point for price to trade into. And right now we are there. What are we expecting price to do? We are expecting to get an entry within this candle retracement from the monthly time frame. Then you can decide to drop to the weekly. If you drop to the weekly, you see that we have 3 candle formation. We have this one. Let me use this tool right here. We have this one. You can see price drop down a little bit there, rejecting, and then we have a little bit of uptrend down here before price closed below. Then we have this strong manipulation right here, and then this candle closing above the manipulation. This is the 3 candle formation, where you have something like this. You have price coming down, and then retracement, and then price taking out the low, and then retrace a bit, then you see price clearing it down. This is a pure liquidity sweep, and this is what the institutional levels do whenever they are about to have a massive retracement. Then you see price closing above, then stops, then the trend continues. This is exactly what happened here. If you look closely, you can see that this manipulation closed above this low right here. Let me mark that out. You see that it closes above that low, and the next candle, which is this weekly candle, closes above this high. Okay, I want you to take note of that. This is smart money reversal pattern. Okay, this is a typical smart money reversal pattern, and then we're having this retracement. So hopefully I'll be expecting price to still push higher over few days left to close this weekly candle. I'll be expecting price to at least go much more higher, or reject to at least this level or this level right here. Okay guys, okay, let's keep going. I'll drop to the daily time frame, and from the daily time frame, what do we have here? We have an order. We have a fair value gap right here. We have this fair value gap. Price has closed and in that fair value gap, and then this candle, let's see what it's gonna do. From the 4-hour time frame, we'll see that price has filling this gap right here. I think this is the new day opening gap right here. This one right here. That's what I see there. And then the hourly time frame. Okay, right here, and then you see this displacement right here from the new day opening gap. You see that we're having a bearish move. This candle, it's such a big candle, so we'll have to go down to the Asian section and see. We have swept Asian section. I'll see that clearly on the 50-minute. We have swept Asian section, so what I'll be expecting is price coming to sweep this high right here. I'll be expecting that. But mind you, I'm expecting a bullish run on DSY, which means I'm going to be shorting Euro USD or GU, and then I'm going to be going long on USD JPY if I get a good entry. But this is somehow a good entry for me. But let me get a good displacement or a rejection, then I might decide to go long, maybe target this liquidity up here, something like that. So if we go to Euro USD, you can see that my analysis is still the same on Euro USD. I was thinking of shorting it directly right here, but That is not a good entry for me. It won't be a good entry. It won't be a wise decision. This was my target right here, but it won't be a wise decision. So I'm expecting the 15-minute time frame to give me at least a major rejection, so I can go bearish for the short term. Guys, if you're watching picture you see right here was a video I shared with my Telegram community, and then I was telling them about the ICT three candle formation. Now this is on the weekly time frame. We are going to go to the chart, then I'll show you what exactly played out. Let's go straight to the chart. Now you can see the retracement. From the video I told them that price was going to retrace. Like whenever we have something like this, you see price clearing this low and then closing above that low, leading to a liquidity sweep, and then the other candle that forms immediately closes above this low. This is what I learned from my mentor King Solomon. And then whenever you see something like this, just know that the next candle is going to manipulate lower or just kick off to the opposite direction immediately once we have this kind of manipulation. But mind you, this manipulation traded into a very significant area. This is on the weekly time frame. If you can see up there, it's on the weekly time frame. It traded into a significant area on the monthly time frame, a very tiny fair value gap on the monthly time frame, which I highlighted right here. This was the two I just placed a minute ago. So you see, traded into a significant area, making it more valid, and you can see that price has swept all the whole liquidity that has to be swept below on the monthly time frame. This is the most recent low. Mind you, this is on the monthly time frame. We are not just placing trade right here. We are going to refine it to the lowest time frame, like the 15-minute before taking our trade. So if you drop down to the daily, I wish I had uploaded that video earlier. So where is my target? From the daily time frame, you can see that we also have a market structure shift right here. What did I do? Okay, you can see we have a market structure shift right there. Let me straight this up. You can see that market structure shift, and then price trading, taking out this liquidity, and also closing above that liquidity. So that makes it a valid structure to hold price to the upside. And where is my target? I'm targeting this point right here, this volume imbalance on DSY. Mind you, this is on DSY. So before trading Euro USD or GU, I mostly come to DSY, which is the dollar index, to check my directional bias in confluence with EU. Since they are 98% correlated, most of the times it works best for me. So that's why I mostly come here. So where am I targeting price to go to? Up here to fill this imbalance before thinking of the next move. Then if you go to the 4-hour, or the hourly time frame is also pointing towards an uptrend. So if I'm expecting price to retrace down before going in for another buy position, I'll be expecting price to come to this other block right here. You can see this other block. I also have fair value gap right here. So it's up to price to manipulate whichever way it wants to. But if I get some sort of rejection right here, I'll be shorting price to the upside. Probably targeting this high first of all. Pardon my drawing. Probably I might be targeting this high right here before swinging the trade to this point. But I love to target the nearest liquidity, so to avoid greed and then price coming back to take me out at break even or hit my stop loss. So guys, this is basically how the three candle formation works for me, and this is how I understand it, learning from my mentor. I hope you find this video helpful. Please like and subscribe to my channel. And then if you look closely, you see we're having some sort of what I call head and shoulder pattern, right? This is a reversal pattern, but you can call it head and shoulder pattern. So if price breaks above and then retest this zone, it's a good opportunity to long for those people trading pattern. Okay, I used to learn how to trade pattern, so I still got that knowledge in me. So sometimes I use it as a confluence with SMC, and then it super works. Third video I'm making on this dollar index. So I'm going to explain quickly, and then you can see the result for yourself. That price actually retraced downward, and then price is expanding now. This is on the weekly time frame, and then I hope you can see how the market behaves. Okay, you see the first one was opened and manipulated down to the open of this candle, and then this one did the same, and then this one also did the same, manipulated down to the open of this candle, and then it's expanding right now. So the next weekly candle, who knows, is going to close bearish or bullish. Let's see how it goes, right? So if I go to my Telegram, you can see where I made the initial analysis. I'm going to closing above progress. You can see the chart right here, closing above, then stops, then you can see the chart right here. Okay, this was when I made the analysis that price was going to expand higher. Okay guys, this is my Telegram channel. I don't do nothing much, and then it's really not a signal channel, but sometimes I just post my trade idea for anyone who is also looking at the pair, like the video I did right here. And then you can see the picture that price was expanding, and then this was just a trade we took earlier on gold, and then it's finally got to take profit. Now that aside, let's go back to our chart, and then we'll see what happened. We went down to the daily time frame. Like if you have been watching my video, you'll notice that I'm always coming from the monthly time frame no matter what. I'm always coming from the monthly time frame. Okay, forget the drawings. This is just to show you my views on the market. Okay, if I'm doing it myself, I already know it won't be this much. I just put some few drawings to the point where the key points I want to use, like this one right here. It's a key point. This is an order block, price mitigated, and then expand, creating a break of structure. This is on the daily time frame. We are not trading on the daily time frame. We're just finding a directional bias on the daily time frame so that we can flow along with the price. This is an fair value gap, price traded into it, and then now we are having this expansion. Now I said that I was expecting price to come down here, come up into this volume imbalance on DSY, right? And you see price is currently trading into that. So I'll be expecting to get a little bit of retracement, then I'll also long it to at least meet this resistance level. I hope that this price is going to this point is going to hold price a bit below before price finally expands into this resistance area right here. But if that doesn't happen, let's say fine, we'll find a way to enter the market. So we got another break of structure. What are we expecting? Push down, then expansion, right? That is the typical movement of market structure or the order flow, right? You know, like they say, if you don't pay for knowledge, you pay for ignorance. I really paid to learn all of these smart money concepts. I've been learning from ICT. The videos are too plenty. I learned a lot, but then I had to pay my mentor, King Solomon, to learn what he has learned all together from the ICT himself. So this is part of his knowledge, which you see right here, what I'm doing. And I know for sure if he's looking at this chart, he's also looking at almost the same thing. If we're not looking at the same thing, we are somehow closer to looking at the same thing in the market, because some of the times I still watch his videos, and then the analysis it's always coming, like it's almost close to each other. Okay, we are always having the same expectation. So guys, I'll also urge a lot of you, instead of going to YouTube watching different videos and all of that, stick to one. Then you pay for a mentorship for yourself, then you get proper knowledge. Okay, there is intelligence in learning. You don't just go to YouTube and then you start learning things randomly. Just focus on something, then you learn the system of the person you want to learn from, or the person you love to see him trade. So guys, this is all for the video. Just trying to tell you that whichever system you're following, it actually works. You just have to stick to it in good terms and then in bad terms. What I mean by that is that in losing and in winning, you just got to stick to it. Okay, I was studying pattern trading like I mentioned earlier in the other video, and then you can see that price broke above this head and shoulder. Then what are we expecting? A retracement back into the neckline and then expansion, right? So if I'll be expecting an expansion on this trade, that would be a retracement at least 50% of this expansion. So this is gonna be my dealing range on Friday. This will be my dealing range. So I don't know, maybe during Asian section the price might decide to just explode higher, and then mostly Asian section comes with some sort of retracement. So I'll be expecting something like this, price retracing into this other block right here. So that will be my new point of interest for price to trade into. You might decide to want to go to the 1 hour time frame to see if you have some sort of confluences around that area to long price. Okay, I'm having a poor internet connection right now, but I know there will be some sort of confluences on the 1 hour time frame, then to the 15-minute time frame. That is the least I can go on the dollar index, and then also on the currency pairs. Okay, what do we have here? Break of structure, retracement, and a break of structure. Okay, that is almost close to the one right here on the 1 hour time frame. So on the 1 hour time frame, is telling us the price is more likely going to retrace from here, but I still stand with this. Okay, so price might decide to trade here, and then boom, also might decide to trade into this place or right into this resistance area, or sorry, support area, before expanding. All right, whichever it is, we're going to see tomorrow. So if I'm to take a trade, I want to see price rejecting one of this area massively. Definitely my stop is going to be below here. Definitely, to be on the safer side, my stop is definitely going to be below. And then most importantly, I'm trading from a discount area, right? Discount area, you see that fair value gap is on the discount. This other block is on the discount, and this is below 50%. So right here below 50% we have the discount, and above we have the premium. This is a normal economics. Okay, we buy high, sorry, we buy low